Hello and welcome into the KE Report. I'm your host, Shad Markowitz, and we're getting an update today from Erik Wetterling, also known as the Hedgeless Horseman. And we'll put a link to the Hedgeless Horseman website down below so you can follow along with Erik's work. And Erik, great to get you on the show as always, just to get an update on what companies have your attention. And we were going through a lot of different companies and ideas, but one that we keep coming back to is Goliath Resources, traded on the TSX.V under the ticker GOT. They put out a news release that's very dense on the 3rd of September, which was just yesterday, and it goes through all these different zones that they're drilling. It talks about 66% of the drill holes so far containing visible gold. They've got almost 100% hit rate on hitting mineralization. There's all kinds of new zones here. There's a new deep zone. There's a blue origin discovery. There's a lot going on in this, different kinds of mineralization. I guess the point is, they continue to drill and they continue to hit pay dirt. So what do you make of this news out of Goliath Resources?
Yeah, I mean, we talked about this before that, I mean, it looks like Goliath really wants to get out of this hellhole, which many juniors are faced with, where it's like there's not enough excitement or threat of excitement. I mean, it's easy not to be forced to buy anything because you think, well, if a junior just raises $1-2 million, okay, if they're really lucky, they can get a super bonanza hole or something that can get the market excited. But not a lot of these companies have had enough money to actually put out a nice string, let's say, of good results that actually forces the market to care, and not somebody can just, well, there's no buying here, so I'm just going to wait for them to raise money at lower prices, or I'm going to short the stock or whatever. So, I mean, it's really felt like, and we've seen this before because they've raised before in this season, it's like they got success, were able to raise money, have more success, at least, you know, a lot of visible gold and stuff, and are able to raise more money. And now all of a sudden they're up to like 8 drill rigs. So it's like one should, I think, pay attention when a company goes up to 8 drill rigs and there's people just throwing money at them with no warrant. So it's like they're planning on drilling 36,000 meters now, I think. We've only so far had assays from, you know, partial assays from one hole. So all of a sudden now, they put themselves into a position where there's almost 36,000 meters of assays that will come out, because that's what they're funding right now. So it's like, you know, if you have 36,000 meters of assays coming and you're already having like 100% hit rate, quote hit rate, not like it's by definition economic or anything like that, but they're kind of hitting mineralization, encouraging signs, add a lot of visible gold to that. I mean, doesn't take a rocket scientist to think that these might have one of the most exciting assay seasons coming up of any junior, basically. And they've, again, put themselves in a position where all of a sudden all of the excitement is left to come. Unlike many juniors where it's like they can afford to raise something, maybe they get a good hole, it jumps up, but that's it, because now everybody knows that the very next news release, even if, again, the results are good, it's going to be a race. And if there's not enough excitement from, let's say, one hole, the market can just sit on it. And whoever wants to get into a cheap placement, they can just short it, or they can sell and just force them to do an even cheaper placement, perhaps, even despite the fact that the project is getting better. So I like this idea with Goliath that they're really trying to get into orbit, let's say, you know, to really break out, create so much excitement that maybe the story will have very different sentiment after this drill season is over. And maybe by then, everybody is going to be talking about Goliath. Everybody's going to know about it. Maybe everybody's going to see it as, oh, this is, you know, one of the most exciting discoveries in Canada in recent history. I'm not saying that's for sure going to happen. I'm saying they're setting themselves up to that position. And if that happens, I don't think they will have a problem raising money when the 36,000 meters are completed.
Well, and I think Roger had mentioned in a prior interview, he wanted to have some money left over to start next season with, kind of like this season, and then be able to expand it. So they had messaged to the market that they would be potentially expanding the drill program, which they've done the last 2 years. But they took some heat for it on some of the social media sites about, hey, look how much they're raising. But to the point you just made, look how much they're drilling. They also have 8 drill rigs turning. They have 36,000 meters going, and they're kind of pressing their bets because they continue to hit almost everywhere they put a drill hole. So because of that, I think the market is willing to back them and say, okay, keep drilling then, and let's make it bigger, biggie-size that drill program once again. So do you like that idea of a company when they're in momentum I mean, it sounds like you do that, like make hay while the sun's shining, while you're hitting, while you're doing good, then keep raising and keep drilling and drill even more. Do you like that idea, or do you think that they should be more disciplined and raise less and just do smaller ones and let the assays speak for themselves? How do you feel about companies potentially over raising and over drilling? What's the balance there?
I mean, that's a good question. I would say that there's always going to be somebody complaining about something. That's the thing I've learned. It's like, and first of all, it's like the management teams, they're in a tough position because they can't foresee how the sentiment in the sector will be a week from now, a month from now, let alone 6 months from now. So you have to make a kind of a judgment call, because we've seen a lot of juniors. You see people say, oh, I don't want them to raise money. I don't want them to dilute. We want higher prices. Management, let's say they agree. It's like they think it's undervalued. They expect the sector to come back shortly. It doesn't come back. And the market knows it. So they start shorting the stock or selling or whatever, knowing that, okay, it's going to be harder and harder to raise at whatever price target, for example. And it's like fast forward maybe 3 months. All of a sudden, you're raising money at 50% discount to what you could have raised 3 months earlier. So then people will start to bitch and complain about, oh, they should have raised early. So you can never make everyone happy, because like theoretically, everybody seems to expect that you have to do, you don't accept any dilution. You don't accept any discount to the share price going down and whatever. It's like you can't have everything. You can't have the cake and eat it too, or something along those lines. So it's like, I think this is a good plan, because again, if they would constantly just do small raises, for example, you have a batch of assays out. So let's say 10% of the excitement is out, then they raise. Okay, so there's 90% excitement left, and everybody knows they're going to raise money again soon, because they only put out raised a budget for 10% of, in this case, 36,000 meters. Then you will have a constant like wet blanket on the share price, and the amount of excitement that is left just goes down and down and down, because when the last raise comes, okay, we're very long in the tooth in terms of drill season. So now it's like very low probability that after this race over the next 6 months, there's going to be exciting stuff. Now they're raising everything kind of beforehand or continuously as the excitement is here. So now there's probably not going to be a single raise until 99.9% of the actual assays are out. So I think they've pretty much done this perfectly. If they want that kind of, okay, we're pushing the pedal to the metal here, and if this is successful, they can go have a really, I think, nice growth curve, simply for the fact that if they hit in the next 10 holes, get really good hits, everybody knows that there's 33,000 meters of drilling left, and there's no race in sight. So that's like a green light for actually, bidding up the share price, because that the next news release is not going to be a private placement. The private placement won't happen for some time, and then we have 90% of all the drilling to look forward to still. So it's very skewed, I would say, to the upside risk. But of course, you can have the fact that they're going to miss on everything, which doesn't look likely. But I think they put themselves into a good position. I think they're playing this better.
Yeah, that's a good point. They should have a steady stream of assays feeding the market news for months to come. So that should put them in a good position as far as news flow to keep the excitement level there. We'll see how it goes. We'll follow along with the assays when they come back in. But another company we were talking about off mic, Erik, is Headwater Gold. We've discussed them before, but they're traded on the CSE under the ticker HWG. They put out a press release, and they kind of have a hybrid model where they're part prospect generator, and some of it they do 100% owned projects. Well, they just put out that they've acquired 2 more 100% owned epithermal vein projects in northern Nevada. So they're pressing their bets in the Nevada area. Maybe these are some things they'll be drilling on their own. I guess they always have the option that they could find a JV partner. But what do you think about the balance on a company like Headwater between having partners and then having some 100% owned projects to drill themselves?
I mean, I think they've done a great job where it's like they're basically have eliminated the required dilution risk. I think they actually made a profit, for example, last year just from management fees out of Newmont/Newcrest. So now we have Spring Peak. I mean, that's just grown bigger. It's going to see more drilling this season than any other season before, at least for the greater Spring Peak project. So you have kind of, I think it's cheap just based on the potential in Spring Peak, because again, Newmont has exercised. They're going into, I think it's phase 2. So they're funding it. So, I mean, Newmont is a, $72 billion company or something like that. Headwater has a $12 million market cap. So, I mean, you don't need to be a rocket scientist that either the market is wrong or Newmont is wrong in terms of, the chance for a home run here. And I think it's just priced way too low. To see them also do work in the background, getting these 100% royalty-free projects done via staking. And again, this is being staked by the same team that had, what was it, 2 years ago, like 10 to 12 projects and got Newcrest to earn into 4 of them. So it's like it's kind of says something about their nose when it comes to picking good projects, I think. So it's like, are these projects, should they have some value, even though it's potential and they haven't drilled them yet? Absolutely. But it's like today, 400 shares traded. So I just like that they're kind of beefing it up. And again, if we go into a bull sooner or later and they can actually raise money and people care about exploration potential, it's like we have no idea how much value can or potential value could come out of these 2 projects that the market obviously doesn't care about at all right now.
Well, it's going to be interesting to see how they do with some of these 100% owned projects. And like you said, they have value underpinning the company already with Spring Peak. And then they have these others where they can maybe have that blue sky exploration upside in addition to having the larger majors as partners to keep pushing those projects along. So a couple different chances to win as opposed to just a one-hit wonder. So I like that idea that Headwater is diversified, and we'll keep following along with that company as well. Well, Erik, it's always great having you on just to look at what has your attention, the news hitting the markets. I'm sure we'll talk again next week and look at a couple more. But if people want to follow along with Erik's work, he does do some deep dives into some of these companies over at his website and on his YouTube channel. And so definitely check out the hedgelesshorseman.com down below if you want to follow along with the companies on Erik's radar. And Erik, looking forward to our next conversation.
Thanks, Chad. And consider me biased. I own shares of both companies, and Headwater is a banner sponsor.